Hey, how you doing? And welcome to Buy, Hold, Sell. I'm Ali Selby and we have a very special one for you today. We scoured the top holdings of some of the country's finest small cap managers, and today we'll be taking a look at some of their favourite stocks. Plus, we'll also be asking our guests to name one stock for the year ahead. Today I'm joined by Ben Rundle from Hayborough Investment Partners and Martin Hickson from 1851 Capital. First up, we have plus-size clothing brand City Chic. I might start with you, Ben. Is it a buy, hold or sell?
I think City Chic's a buy. I think their recent result was actually quite good. Stock sold off about 20%. I really like the management team and I really like the way that they've approached the US market and entered there, and I think they're going to have a lot of success with it. Well, I mean, they already have. So it's a buy on the sell-off for me.
It kind of feels like we're finally getting over COVID. You know, with a reopening, could this stock really benefit? Is it a buy, hold or sell?
Yeah, I agree with Ben. I think it's a buy. It sold off significantly post its result in February. I think unduly so. The market's worried about the inventory levels. I think they can work through those. Trading a forward multiple of 17 times below the market. Phil Ryan, CEO, one of the best retailers in the country. So I think down here, I think it's a buy.
Next up, we have Unity Group, which recently just got a takeover offer. Is it a buy, hold or sell?
Yeah, I think it's a hold at these levels. So it has rallied 30% on the back of that proposal. Still trading 12% below the implied price. So I think at these levels, Unity's a hold.
In its results, it reported that its revenues had lifted around 98% from the previous half. Is it a buy, hold or sell?
I think it's a hold as well. I mean, it's a great company, but yeah, with a takeover bid on the table and only trading at a 20% discount to that, yeah, I think hold it for now.
Next up, we have Fundy Favourite Lifestyle Communities, which nearly doubled its net profit after tax in the first half. Ben, over to you. Is it a buy, hold or sell?
I think it's a hold only on valuation grounds. It's one of my favourite companies. I think the management team is absolutely first class. They've done a great job of showing why high levels of customer service can be such a success. I really like the business. They've grown without using extra capital and will continue to do so. It's just super expensive, so it's a hold for me.
Its share price has sunk around 21% year to date. Is it looking a little bit cheaper now? Is it a buy, hold or sell?
It's definitely looking cheaper than it was, but I think it's still quite expensive on 30 times PE. They've done a fantastic job over the last few years. Got the tailwind of an ageing population, supporting that business. But I think given that valuation, it's a hold.
Next up, we have Johns Lyng Group, which recently upgraded its revenue guidance for FY22 by 11%. Is it a buy, hold or sell?
Yeah, fantastic business. They're obviously benefiting from the recent floods across the East Coast. Made a highly accretive acquisition over in North America at the back end of last year. Great management team. Having said all that, I think it is all priced into the stock. It trades on a PE of 55 times, 3 times the overall market PE. So I think it's a hold based on that valuation.
It's also been caught up in the recent sell-off. Its share price has fallen around 7% in 2022. Is it a buy, hold or sell? Yeah,
Martin makes a good point. It's very expensive, but I still actually think it's a buy. I think that their earnings base is going to significantly increase off the back of these floods in Australia. And I think with a management team who have such a great track record buying a business in the US, I think they'll have a lot of success with that. So it's one we're happy to stick with and buy.
Okay, Ben, I'm really excited for this. We asked you to bring along one stock that you think can outperform this year. What have you brought for us today?
DGL Group is the stock that I think can outperform. They are a producer of chemicals. They do storage as well as recycling of those chemicals. So the beauty of this industry is that there's high barriers to entry in the capital cost and the permitting that's required to be able to operate. Simon Henry, the MD, owns just shy of 60% of the business. I think he's done a fantastic job. I think he's a very good capital allocator and he's already made about eight acquisitions since they listed. So I think it's a really exciting company and I think it'll be much bigger in a few years' time. Okay,
Martin, Ben picked DGL. What stock are you bringing for us today? What's your number one pick for the year ahead?
Mine's Oz Forex Group, so it's a top holding for us at 1851. They operate in the foreign exchange space, trades on a PE of 20 times. They had an investor day today, which was very, very positive. I think what investors are missing is that a lot of the revenue and earnings from that business today comes from the small business and enterprise space. It's only got 2 brokers that cover the stock, not well held by the market. They made a highly accretive acquisition a couple of months ago in Canada, so we think that the PE can re-rate and the earnings that consensus forecasts have are understating their growth. So that's the top pick for us at the moment.
We hope you enjoyed that hit list of Fundy favourites today. If you did, why not give that episode of Buy, Hold, Sell a like? Remember to subscribe to our YouTube channel. We're adding new content every week.